Hey guys, Brad here with Numbers at Finance. We're doing a market wrap for Tuesday, March 26th. We're going to take a look at the daily chart here on the SPY futures. That's the S&P 500 E-mini futures, trade around the clock. /ES is the ticker if you'd be interested in checking that out. I'm going to zoom in real quick here. Today, or on Tuesday, 3/26, obviously a pretty big green candle. Seeing roughly a 0.5% jump, and even after close, now we're moving into our Wednesday candle, 3/27 here. Again, this is a future that trades around the clock. We're seeing another green candle ahead of us. Can't quite see the percent there. Let me auto zoom. In this Wednesday candle, we already see a jump of about 0.25%. Expect that to fluctuate a little bit more towards market open tomorrow on Wednesday. We had a close here above the triple top on Tuesday. That's pretty significant. Closing prices are typically the most important. So I could see this being yet another buy-in rally for a short-term bullish case here. Again, a buy-in rally, even if it makes a new high, will likely fail to make a new high on the momentum. Here we are at the MACD. This is my momentum indicator that I use. The MACD is the blue line. This white line is actually just a simple moving average. But this blue line is the MACD, which represents momentum. And unless I don't see that being able to make a higher high than our previous peak, just considering the volatility of sell-offs recently and the fact that we've been making pretty steep bottoms, and anytime there's a new high, it's shallow. It's not much higher than the previous peak, so I don't see momentum making a new high, even if prices do make a new high. Thus, this will just be a continuation of divergence, and even better for a long-term bearish case. Moral of the story here, as this week continues, we're coming into Wednesday, towards Friday, we could see a higher spike in prices, a higher buy-in. Maybe make one more high. I'll check out the weekly chart real quick. Making a new high. That would leave this candle about here. It would not be an engulfing candle by any means, considering where this candle began. It gapped up above last week's previous red candle. So even if we do make a new high, it's not going to be an engulfing candle, and thus isn't that strong of a case for a bullish run. I could see one more high being put in before this divergence finally does play out and we have a pretty big sell-off. Or the market could just increase forever. Again, there's nothing for certain in trading, and we have been rooting for this, bearish. We've been advocating for shorts, rooting for this bearish sell-off due to the divergences for quite a while now, and the market does continue to extend upwards. And so, sometimes you're wrong, sometimes you're right. You just hope that you can prevent some losses, prevent your drawdown, and make money where you can. Be safe. Don't be too risky shorting a position like this, especially when the market is, naturally due to increase over time. Moral of the story, though, is the market is severely overextended upwards, and that's just a fact of the matter. The risk reward is much in favor of shorts right now, and thus the bear case is definitely the stronger one to play out here. TVIX is the volatility indicator. We're looking at the daily chart. Here we see a pretty big gap down from our close yesterday, about down 9%. However, this volatility indicator is just like I said in previous videos, it spikes when market sell-offs are occurring. When there's high volatility in the market, lots of selling, TVIX price is going to spike. It essentially it's almost a future for where the market is bound to be in like midterm future, a few weeks, few months from now. So essentially, the lower TVIX gets, the outlook for the market in the future is roughly that low. So if we are making another run towards this support level, it would be a very good buying opportunity, especially if that divergence continues to play out on the S&P like we've been watching the past few weeks. Lastly, I'd like to point out that oftentimes when these divergences form, we begin to trade in what's called as a rising wedge pattern. You're going to see these bottoms are definitely narrowing in towards the tops, the channel that's forming. So perhaps we have another run up that could make a new high, but any break of this support in the wedge is likely going to be another steep sell-off like we had this big red candle here. 1.68%. Typically it starts off with a boom. But the moral of the story here with the divergences is that there will be an overall trend reversal. So next time we break the support line, I would expect that to be the finalized reversal, and then instead of this 2 months 20% run upwards, we're going to be looking towards a longer term 10 to 15% drop downwards. Last thing to pay attention to, and this is very important to pay attention to regardless of anything I just said in the last 5 minutes, this 50-day SMA and this 200-day SMA are getting extremely close to each other. When we had the death cross where the 50-day SMA moved below the 200 for the first time in a long time, we had one of the biggest red candles we saw in the sell-off, about 3%. It can work the same way in reverse. If this 50-day does cross over the 200, I would expect that single day could happen this week or early next week. I would expect a decently large green candle, and a decently, could easily just be, this was a 3% sell-off, so a buy-in could be, 3% upwards. Definitely something to be aware of. Dangerous if you're in shorts right now, even though the risk reward is in your favor. Definitely something to pay attention to. However, immediately after that crossover, a giant spike of 3-4%, and this is completely hypothetical, maybe something like that wouldn't happen, but a spike like that would definitely add to the overextension. And if it fails to make a new high in the MACD, the divergence is then, prolonged again, and then would definitely be a good idea to maybe get into some shorts with maybe a strict stop loss in case there's more buying to follow that spike. Hope this video was helpful. Definitely a lot of market volatility to ensue in this week and the next few days. So pay attention, and I wouldn't be taking too many risky positions. Hope you find this helpful. Like, comment, subscribe. Get your numbers up.